yesterday, but that means that like a grind up tomorrow or overnight, it's going to be hard to get above like 5980 or 6000, let alone into like their massive pile of sold puts that are all up here. If we open at 5705 tomorrow, the market's probably going to crash on Monday. Well, the AM, they're going to want to, if they're going to salvage anything, they need to pump tonight to get out of the AM contract at open settlement. So the AM contract shit that's underwater, they're going to want to get that in the money or out of the money, the sold puts out of the money tonight. The problem is they can't hold the highs anymore. So even if they were able to get it back to like 59.50 or 59.70 and bail some of that shit out, it's going to be really hard for them to hold that because none of that, there's the positive charm from the calls is gone because all the short calls took profit on the market drop. So even if they're able to pump this, it's probably just going to fail again. What do they have to get it to? I mean, ideally, like back to 6,000. 59.50 futures or SPX? SPX. It's already at 59.50 futures. We won't find support till 5,000. It's delta neutral in the JPM sold puts between us and there. There's also like big support back at the like 56, like 56.96 level. So we gotta watch those. And don't forget that fat fucking synth long, which is currently at kind of like at 5,900. Yeah, that's not great. There's still like 200,000 puts sold at 5,000 on SPXW, and on SPX there's a big pile of there's like 200,000. There's a like 200,000 puts at 5,500. 150,000 at 56, 57, 57.50, 58, and then 1.1 million sold puts on the 5,000 strike. So it could find support, especially between 5,800 and 5,700, where there's kind of a concentration. I don't want it to. I want it to drop to 5,000. That'd be awesome. Then my Vega puts would go in the money. Overnight calls would be regarded. I mean, I've been buying like overnight out of the money debits because they're fucking cheap. So if this shit bounces back like 100 points overnight, I'll be covered. Calls, you don't want like a call for a row. You don't want like a call with a shitload of theta. Like a 2027 call or 2028. The problem is no one's gonna buy that shit off you. Yeah, the 12,000s. No one wants to buy that. It's such like an obscure hedge that it's unlikely you'd find any liquidity there. Maybe something like an 8,000 call for like 2028. Bit short of the expected moves, kind of just flat on the day. So none of that volatility realized. Volatility should trim into tomorrow. Rates continued higher at the top end of the curve. We got the 10-year closing out the day at 4.572, 20-year at 4.83, 30-year at 4.74. Dollar up today, despite a little bit of a pullback this morning, closing the day out at 108.37. Commodities down again. We're still seeing a big sell-off in precious metals alongside the rise in the dollar, and talks of peace in the Middle East are suppressing oil and energy prices. Correlation on the 1 and 3 month spiking up pretty hard. Now we've got a big gap and divergence between the 1 and the 3 versus the 3 running hotter than the 1. And this is as this goes on, we should start to see the 3-month catch up if volatility expectations start to extend further out. If volatility expectations, like higher vol expectations, stay short term, then we won't see core 3-month rise very much. We'll see it kind of flatten out while core 1 month chops, and then core 1 month will probably on a reversal would dive back below the 3-month correlation. Leverage on the carry just shy of all-time highs at 8.8x, 8.89x. I think the all-time high is actually a little bit higher than that. Yeah, I think it's right there. So just 9x even. But it really close. And they're using that extra leverage to try to pin down vol. We got the forward yield of volatility dropping from yesterday's close at 43% to 10% today. So still a lot of effort to get vol down, even though you're not seeing it in the SPX. It's going on. So watch out for bulls trying to turn this shit around, because it will probably be very sudden if they are successful. Move, for some reason, I don't understand why, but still under 100. We're not seeing a big spike in bond volatility, despite the staggering move in yields. But correlation on the 3-month also falling off a bit today. Skew's not really moving much. Nobody picked up any tail risk hedges yesterday, even with the big drop. Maybe we'll start to see it move down after today, but the downside is still extraordinarily unprotected right now. Yeah, it was probably like almost the entirety of the S&P below its 20-day moving average at this point. Correlation between VIX, cash VIX, still rising. We had a little bit of a pullback in it yesterday, but that correlation picked back up again today. VX still far under where we saw VIX spike to, and the divergence there was, VIX hitting like 27 and VX being at like 21, and so that's why we were a little negative yesterday. But as that continues to become more correlated, we should continue to see higher and a higher realization of volatility, which is effectively unpinned right now. Fed Fund futures down to 0.2 cuts for June of 2025. And this part's really interesting. The 10 2-year spread is now positive 25.5. And if you go back historically and you look at the periods at which the 10 2-year spread was this positive, you will see the COVID crash, you will see the financial crisis, you'll see the dot-com bubble. And so as the 10 2-year spread continues to widen, or narrow positively, this gets kind of spicy. I'm not saying we're crashing, but I'm not saying that this is good. Also, I wanted to kind of go over the technicals before Friday. That they matter a little bit here. We didn't test the long-term trend that we broke through back in October here, and that's still a little bit to the downside, around 50-80, 58-40-ish. It moves every day, right? It goes up like $1 or something. But yeah, right around like 58-40, 58-50 out a little further. But on the weekly, our next major test besides that is going to be down here at the 20 MA. And that's currently at 57.75. I think this represents one of the largest 1-week drops, or very close to one of the largest 1-week drops we've seen this year. And yesterday was the largest single-day drop we've seen since 2022. That's, fairly significant, especially given how little of volatility has opened up on such a massive move. But on the daily, we are below the 50. And we are continuing. It looks like we're continuing down for now. Today did have a slightly lower low than yesterday, and we may get some continuation, but there may be a little bit of consolidation here before we do. So keep an eye on that. It does look good so far. I would still like to see this lose the 59.69 level, because that would actually confirm the top here, and that would mean big downside. Big downside shift in expectations, that kind of stuff. Piece of shit gonna open at 6K tomorrow? No, I don't think they can bounce it that far. I think realistically they might be able to get it to like 59.50, maybe 59.70. But with the low close, they may not be able to do shit. We're not even below delta neutral yet. Relax. We got a long way to go. Delta neutral's all the way down at like 5,500. So if we start pushing through this, then we can talk about crashing. This is the last time we were talking about crashing was when we tested DN back here when DN was around like 5,100. We tested it and bounced right the off of it like 12%, 10%. So yeah, let's wait for the delta neutral test, and then we'll see how things are going. Right now, if we go out on the daily and we take a look at the Monte Carlo sim, it's still very much projecting upside by like Feb April. It's a very, very low probability of downside. So we're gonna need to drop a lot more for expectations, at least on my end, to shift that dramatically. That was because Yuta took back the rate hike. I remember. Yep. It's all about preserving the banks. 10% correction, not so likely then, or longer time frame. I mean, you just need to confirm it, right? Don't just buy like a 10% correction put. There was a window of opportunity to pick up some Vega puts like last week. I tried to let everyone know about that, but I mean, short of those, like you just got to play it level by level. You can make plenty of money doing that, not get blown up buying overpriced puts. Who does tail risk hedging benefit? The people who sold the tails, which is everyone. Thanks, Randall. All right, guys. Thank you so much. I will see you tomorrow. Just a heads up, I will be leaving the stream tomorrow at around 3:30, a little bit before close, but I'll be here the rest of the day. Yeah, no problem. The roundtable, oh yeah, the quant roundtables tonight. It'll be over on the Discord. I'll stream it on the YouTube as well simultaneously, just so it's saved somewhere. But we're gonna be having that at 8 p.m. tonight, and anybody's free to join up. But if you're a pigeon whale, you'll be able to participate in the Q&A. Thanks, guys. Have a good night. Later.